Hello everyone, this is Andrew McNair from SWAN Capital with our February 2016 Educational Economic Update. In this month's video, we're going to be talking about some of the major economic headlines that influence markets and give you some insight into what it might mean for you as an investor. Now, as always, please stay tuned at the end for a required disclosure statement. So January was another volatile month for stocks. And investor sentiment turned negative on more bad news out of China. And plummeting oil prices didn't help either. So let's talk about some of the major month's headlines. The first look has to be at fourth quarter economic growth, which showed us that the economy hit a soft patch in the final months of 2015. Gross domestic product, or what's often referred to as GDP, grew just 0.7%. which is a disappointing drop from 2% that we saw in the third quarter. Now, fourth quarter GDP growth will be revised 2 more times as data comes in, and it's possible that the final result will be more optimistic. However, we're not holding our breath and not expecting a ton of improvement. So, why did the economy slow down? We can attribute a lot of this drop to lower business spending and weak global demand. However, the data also shows that the U.S. consumers here aren't spending the extra money we're saving at the pump with lower gasoline prices. So does the slowdown mean here in the U.S. that we're heading into recession? Probably not. It's not great news, but the economy did go down into negative territory in the first quarter of 2014, and it bounced back rapidly. Now, in other news, the Federal Reserve met in the last week of January and declined to raise interest rates again. Now, that's not a big surprise given the challenging economic conditions we're seeing, but some experts think that the Fed hadn't made the wisest decision because with so much uncertainty in the markets, maybe a rate hike could have given us investors more confidence in the economy. Now, on the other hand, inflation remains low and economic growth is modest. So the Fed might hold off on further rate increases for a few months. Now, earnings season kicked off in January, and the overall picture is one of lower earnings and lower revenues. And that's not a surprise because we know that American firms are facing major challenges, such as slowing global economy, a strong U.S. dollar, and weak commodity prices. But more than 2/3 of the firms have reported so far of beating their earnings targets, which tells us that managers are doing a better job of managing expectations. Now, we need a positive side of this report, and that is manufacturing. A gauge of manufacturing activity actually blew away expectations and came in at the highest reading since last January. So why do we care about manufacturing? It's because it's a backbone of economic activity in many parts of the U.S. And it seemed frozen after several reports. And it showed us that factories were struggling with demand. Now, this new data is a refreshing change, and we're hopeful that it'll continue in this year. Now, that's going to be it for February's Educational Economic Update. And as always, if you have any questions or concerns about what you've heard and what we've discussed, please give us a call at the office at 850-380-9558. That's 850-380-9558. Now, if you're a client, you don't want to miss our upcoming client event, which is going to be Invest in Yourself. We have a spa day planned for the women, and we also have a skeet shoot planned for the men. So you don't want to miss that client event, and you can RSVP by calling the office at 850-380-9558. That's all for February's educational update. This is Andrew McNair from SWAN Capital, and we'll see you next time.